Oh, what's going on, everybody? Welcome back to your most favorite YouTube channel. Today we're looking at ticker symbol AGIO, that is Agios Pharmaceuticals. If you know me and you know my channel, I review biotech stocks when they are unprofitable and I release a video. I get so much hate. People are so emotionally invested that they just take it out on me, which is fine. Huma, when I released the video, was $8. Now it got as low as 2. And then Viking Therapeutics, I think I released around $33, $34, and now it's 28. We might see a move back up to 34, but I think ultimately it's going lower. However, AGIO is different, they say. It actually has sales. So that is good. I won't get as much hate, and we'll be able to go through the stock projection calculation here and probably get a fair or a fair or realistic price target. Excuse me. We're also going to run this on Thinkorswim for advanced charting. Oh, I've done this one before. Awesome. So we'll go ahead and make sense of these different patterns that I have, which is cool. We'll decipher that in a minute. But for now, let's just go ahead and jump on in. The first thing that I see is a huge gap right here at 57.58. Typically, it looks like all gaps have been filled before, and we're on the daily. Yeah, so let's just go to the monthly here. So we like to look at the bigger picture and then whittle our way down. Looks like this thing's just been on a downhill race to the downhill since 2015. It was $130 stock in 2015. Now it's 32. Let's make some sense out of this. So it looks like it is with the bears at the moment. We can see, can you guys see it's kind of zerking down right here. Momentum looks like it just crossed down. Huge sell off here from 60 down to 30, about almost a 50% sell off in 1 month. Money flow, it's hard to tell if institutions are buying or selling here, but we're going to validate that up to the date. And looking at the data here, so we do have some income, so we'll check on that. Looks like they have a lot of cash, very little debt, gross margin 73%. That is beautiful. They are very profitable just based off of this. We'll see if this is a one-time payment or what, because typically when you have sales, your income does not exceed unless you get like a one-time payment, a bonus, royalty, etc. So we'll check. Low float. So this thing could rock and roll. But let's crunch the numbers here because that's what I'm most interested in. $1,860,000,000 market cap. Income of 673,730,000. Good for them. And then sales 36,500,000. All right, let's go on down. Let's go on down, going on down. And we're gonna go to the cash. Wow, they have a lot of cash. 893 million as of Q4. 893,710,000. Debt is 40,210,000. Very ideal. Total assets 1.6 billion. Total liabilities 122 million. Assets dwarf liabilities 10x. That's just beautiful. Onto the income really quick, man. Because that income is it's not normal to have your income exceed your sales. Okay, so it looks like the income is regularly negative 90 million, except they got a one-time payment in the Q3. That makes sense. Looks, gross margins used to be 11%, then it jumped to 69, 72, 75, 64, 76. So beautiful there. So this one-time payment here definitely inflated everything. So it's hard to guide and look at. So I went ahead and I Googled why did they have a strong Q3 2024. They did receive a one-time $1.1 billion payment from Servier and Royalty Pharma following the FDA approval of their drug. My next question is, are they going to continue to get royalties? AGIO is expected to receive royalties from Servier and Royalty Pharma in connection with the drug vorasidenib. So they received a 200 million milestone payment in the connection with its sale to oncology business in 2021. AGIOS also retains a 3% royalty on annual U.S. net sales greater than $1 billion. So that's for Servier, and then Royalty Pharma. AGIO sold their rights royalties on that drug that I couldn't really say for $905 million. With a 15% royalty on up to $1 billion in annual U.S. sales and 12% royalty on U.S. sales of $1 billion. AGIOS will keep 3% of royalties on U.S. sales surpassing $1 billion. So they do have diversification in their business, which is fantastico. It's pretty cool. So good for them. Very good for them. Let's go back up to the top and just take a peek here. This is fantastic. You can see the growth just blossoming there. It's interesting that they did not include the multi-million-dollar payments from Servier and Royalty Pharma as sales. So that's cool. It helps differentiate the actual true sales from their income that they received. So just good on their accounting. And we're going to divide this by 57,160,000. Potential stock price of $59.90. Analysts have it at $54. I do want to just be realistic here. Just going back down. Net income definitely skewed things. So if we were to do this, our income, let's just say it's negative 90 million. Typically, that's what it's going to be. Fair. That brings us to a $46 price target. Where did I say $46? Was that the analyst target? No, it's 54. Weird. Okay, so if that's the case, and then they have that, and their market cap goes below 1.8 billion. Let's not go there yet. So that's semi worst case scenario. If this stock is truly gonna suck, we will see institutional selling, right? You would think if these big quant traders, these really smart Wall Street people who get paid millions of dollars to perform analysis, if this stock is truly gonna suck, we will probably not see the market cap go down, which means we should see institutional ownership over 106%. 106% is old data. New data is 118%. So institutions are actually adding here. In that, I'm recording this on March 8th. We can see this is the newest all-time high in the stock since 2021. 2021, where was the stock? 2021, the stock was at all-time highs and institutional ownership was up here. Now it's down here, but institutional ownership is still high. So I consider that very good. The latest 13F files that we have are from March 3rd. So literally last Monday. So filings are pretty up to date. I just wanted to confirm that with you guys, audience, and myself, because if institutional value was going down, I was going to decrease this to 0. And that would put our stock at $14. Do I think the stock is going to $14? Based on the demand from big money, they are loading more here, which means the market cap should stay relatively flat. So what if we just have this at 1 billion? It's $31 stock. So I think we're trading at a pretty decent price, honestly. But we also want to keep in mind the trend is your friend until the end. and the trend is still pointing down. Although institutions and hedge funds are adding here, the trend is down. So as long as you can stomach volatility, and if you love deals, if you're someone who sees your shampoo, deodorant, your favorite food, your cereal, your fruits, your avocados, when they go on sale, you buy more. This might be your kind of thing. You might have found your new kink. So going back here. All right, let's decipher this. Buy, sell, buy, sell. So I think we might have another top playing out here. Let's just go ahead and... Ooh, that would be gorgeous. Okay. Then we have this right there. That is fantastic. And we're gonna extend to the left, and we're gonna make it perp. Just make it stand out. Cool. Perfect support over here. Perfect resistance. Test of support falls through, and then we see a mix of support and resistance here. 10 out of 10 support, 10 out of 10 support here. Could probably clean it up, but great resistance check. It said nope, nope, we're not ready. I say watch to see if this touches 26. 26 is our next target. So we would have wanted to sell here, sell here, sell at the high. So yeah, watch for 26. I think we see 26 before we see 52. Watch for 26. We're also trading in a bear flag on the monthly. So what that is, we have our flagpole here. I'll just go ahead and just draw it really quick. Flagpole. All right, let's just edit that. Edit channel. We're going to make it just bright red and super thick. Do I have a bright red? Yeah, okay. Make it super thick. So there's our flagpole. Here is our flag. Let's remove that and let's make it super duper clean. Super duper clean. Right there. This is our bear flag. So you can see it's the upside down flag essentially, which is bearish. So this is a chart pattern. You have your flag pole right here, this long line. Then the flag, it's gonna play a little ping pong, and then it's gonna go whoop, and it's gonna fall down to ideally $26. Now, when it gets to 26, is that the buy range? Personally, I would consider it only because a few things. This company is diversified in their income, their money that they retain. They're diversified. They are growing strongly here. That is fantastic. Also, you can see 2020 there were 69 million shares. Now it's ranging 54 to 57. So it looks like they stopped adding shares to the pool. They have how much cash do they have? Let's see. Quarterly cash, I think it was like 800 mil. What was it? This is important. Very, very 893 million. So this is important, and I just want to reiterate this. Imagine they have $893 million. They make $36 million a year. However, based on their income, they're losing $96 million. So they have about 9 years of doing what they're doing before they get into a red zone emergency, raise cash from shareholders, find out ways to raise debt to make the operations continue. With their diversification and income for these royalties, plus their growing revenues, this is worth the risk, in my opinion. If you can stomach volatility, if not, Google what ETFs have this AGIO stock, buy that ETF and sit a little bit more comfortably. However, this is just amazing. The EPS here, although it is very one-sided, it does show there is some positivity to that. Shares outstanding, no real major concerns here. Institutions are buying this up. So I would just wait on this one until it gets to 26. Where'd it go? Yeah, wait for that $25, $26 area, and then I think come back, reconsider how you're feeling, check in with yourself, check in to see, can you stomach the risk, all that. So I personally like this one. Also, just for my charting fanatics out there, we do have a potential cup and handle setup. Left side of the cup, we got our cup here. Right side of the cup, we always want the right side of the cup to overshadow the left side, which it is. It's up here. Left cup's down here. Now we're seeing our candle throwback. So ideally, what I think we want to see is this next move down, whether it's March or April. We don't want to see it go lower than 2017. We don't want to see it go lower than 17. We want to see it hit 25. We want to see it consolidate here. Then we want to get in. And ideally, we sell right here because that is our sell zone. Always, well, it's a buy, sell, buy, sell. So get in maybe at the 26, maybe right to 89. Who knows? We don't know. In terms of potential price targets, 60 is going to be an obvious one. That's just where our recent highs were. So best case scenario, we go down to 25. We don't go lower than 17. We see some consolidation, then we see a reversal up, and then we sell. Maybe wait for it. Maybe it starts to do a long-term reversal and it bounces off of 64, 66. We're going to see. So just give it some time. I think we'll see a good opportunity here. If you made it this far, I appreciate you so much. Consider subscribing. It lets YouTube know that I do create something valuable. Anyway, take care, and I will see you in the next one.